Boom, we're live. Thank you for watching. It's Chris Igoe. We've got a lot to dig into today because who still wants to live in Florida? Anybody? Nobody? It's the end and the collapse of the Florida real estate market, the housing market, the condo market. Doom, gloom, and uncertainty is forecasted according to many. And I have learned that the perception typically is whomever's reality, right? So I want to debunk many things that are perception related right now by just sharing the truth. And I have learned the numbers don't lie, the data does not lie. So, while I certainly am capable of lying, and anybody else is certainly capable of lying, I am committed to telling you the truth so that you are empowered to make the best decisions for yourself, for your family, and for your financial bottom line. And there's a lot going on right now. Now, if you are watching live, this was not really planned in advance. It is the last day of the month. It is Halloween, October 31st. So I will not give you any. Well, actually, I'll try my best to give you treats, which are the truth, and I will not trick or deceive you in any way, shape, or form. But if there are areas of concern, if there are places within the southeast coast of Florida that you want to know more about, then leave them in the comments and I will try to reply to them in real time. But I was just down in Miami Beach for a convention, met with lots of other real estate professionals. And yes, it was a real estate conference. So, no, I don't expect many people to be bearish on the market, but I'm always looking for people to discuss topics with. And particularly, I was looking to hunt down people who, in the past, during the last crash, during the last crisis, thrived and succeeded and had success with short sales and all types of other distressed properties because I want to see what they think the market looks like according to them. They've lived through that cycle in the real estate space. Well, I have not. Now, I was a stockbroker. I did trade through the great financial crisis. I did trade through all of the different global economic meltdowns and crashes and crises that happened on a global scale over the course of 20 years, but I wasn't in the real estate business at that point in time. So I do have a perspective, which I'm going to share, but let's just get into the numbers because nobody wants to hear what I have to say other than the truth, right? So I'm going to start with, and the reason I'm starting with this, I think is very important because I've been doing a lot of traveling recently within the last week. I was in Miami Beach, as I mentioned, and Miami Beach is a very different market than where I live, right? I'm in Palm Beach County. There's not much condo business that I do within my county. I typically am in residential housing, particularly in Boynton, Boca, Raton, and Delray Beach and surrounding areas, but primarily single family homes. So I don't necessarily, what's up, Josh Bryan? I don't necessarily have my finger on the pulse of what goes on in the condo market in Miami Beach, but lots of things are changing, and obviously there's great concern about what's happening in the condo space within the Florida markets. There's all types of issues as it relates to hurricanes and insurance and inflation and affordability. So we're going to cover all those things, but also prior to that, I flew into White Plains, New York, and visited with some friends in Connecticut. And when I did so, I landed in White Plains. Actually, I'll tell a little story here before I get into it. So I'm leaving from Palm Beach International, and when I got to the airport ready to arrive on time for my plane, I was not surprised to learn that the plane was delayed. And so I stood in front of the flight attendant, got the information, and as I did, there was a crazy woman in front of me who was none too happy. She looked like she may have been on something. She looked like she may have not had much sleep, and she was completely frazzled and frustrated and irritated by the delay. Unfortunately, when she turned around, she made eye contact with me, and I felt obligated to try to ease her concern a little bit, let her know that it would be okay. And she wasn't having really any of that. So I just suggested maybe she should sit down and rest and have a very nice day. I walked away. Well, fast forward a little bit. Now I'm on the plane. I happen to be, and this is, I'm flying JetBlue, so it's not like there's a first class or anything like that. But I do, of course, I'm first class. But I sat in the front seat of the front row, and I had the ability to see the entrance door and also the flight attendants in front of me, who I was being friendly with. But very quickly, it became clear that there was an issue. They were going to, I asked what the problem was, and they mentioned that they might have to throw somebody off the plane. And with that, if they don't voluntarily agree, well, then they're going to have to deplane the plane and there will be a further delay. So none of that sounded really like much fun to me. Nobody likes to get deplaned. And so I watched as her supervisor went back and spoke to the person of concern that was going to be thrown off the plane. And in the interim, I watched the police come to the front of the plane and get ready to arrest her. So, coffee, please. So, anyway, I watched them do that and she refused, but I realized it's the same woman who I had a brief encounter with. And so, as they came back frustrated and angry and unhappy with the fact that they were going to have to throw her off because airlines don't like to be thrown off their schedule any more than we do, or nor do they like the economic impact of what that means to them. But it was pretty clear they were pissed off. It was pretty clear that the police were about to do their thing. And so I felt a moral obligation, much like I feel a fiduciary responsibility to all of you to know the truth about what's happening in the market so you can make the best decisions for yourself, for your family, and for your financial bottom line. I felt like I had to advocate for myself, and I stood up. I made eye contact with the woman. Nobody else on the plane said anything, which I find surprising, but I knew that I had connected with her, and I hope that might create a different response. So I stood up, I looked at her, I said, ma'am, I know you're frustrated. I know you're unhappy, but the decision's already been made. You are going to be forced to leave the plane. If you do it voluntarily, you don't punish everyone else on the plane. If you don't, you do punish everybody else on the plane. So please do the right thing. And I see the police right there. They're going to come and take you off the plane. You may get a felony. Please do the right thing, leave voluntarily, and we'll all have a very nice day. To which she responded, fuck you. And that was not the correct answer. Unfortunately, what's up, Timothy Hobbs? I had a knee-jerk reaction, a reflexive response. I probably should have been more measured with my response, given the fact that I knew the police were there and I might be subject to being thrown off the plane. But I let her know, as if I was scolding a dog, get the fuck off the plane right now. Thankfully, that did not manage to find its way onto TikTok, but I scared her sufficiently enough for her to pick up her bags and leave the plane. And so she exited the plane while telling me and everybody else she was going to sue everyone. And so far, thankfully, no lawsuits have been filed, but I wished her well. And when I went to sit back down after she had been escorted off, I got a standing ovation. So sometimes doing the right thing is uncomfortable, but I believe doing the right thing is the right thing 100% of the time. So story time is over. Now let's get into, I'm going to share some screens here because I know, actually, I forgot the whole part of those. The main purpose of this story was not to tell that flex. It was more when I landed in White Plains, New York, which is not my market, right? I went to collect my bags, and in front of me, so shout out to the person who was in front of me. There was another incident. Someone in front of me, a woman and man, husband and wife, they accidentally grabbed the wrong bag, and literally they're right in front of me. But they grabbed a big black bag, and at the airport, when you're collecting your luggage, you'll probably find that most people have big black bags. Well, they grabbed the wrong one, and immediately some woman came running up to him and accused him of stealing her bag, and it was pretty intense and completely unwarranted in my opinion. But she grabbed the bag, left, and there was a moment of tension that existed. And so once again, I continued to not mind my own business. I tapped him on the shoulder and I said, you'd think the least you would do is thank you for taking the big bag off of the conveyor belt. And he laughed. But then he did a double take and he said, oh my gosh, you're that guy from YouTube. And that was kind of surprising, but evidently he's a big fan. Him and his wife watched the content. So I want to send a special shout out to both of you. Thank you for watching. I'm glad you find this useful. Now we will get into the numbers, but it never surprises me what kind of impact that YouTube can have and how much connection that we can create across the country and across the world. So good afternoon, love your channel, longtime follower who's looking to move to the Boca Raton area. Chazzy Chaz in the hizzy house. We are going to cover Boca thoroughly here in a minute, but I wanted to go into something that he mentioned to me, which is that he watches my channel, but he also watches Reventure. He also watches Michael Bordenero, and I think both of those channels are fantastic, but I've also learned that their perception and reality seems to be very skewed, but don't take my word for it. Let's see what the numbers say. But in the interim, before we get into it too much, let's at least have a little look-see at what the perception seems to be as per Reventure Consulting, who again, much bigger channel, tremendous success. I think he's great, but interest rates just exploded and home buyers have vanished. Mortgage brokers are reporting 45% collapse in mortgage applications. And Contagion is spreading. 40% price cuts popping in. Why isn't it telling me where? Oh, there we go. In Georgia, Tennessee, and South Carolina. Here come the foreclosures. Get ready for $200,000 discounts in Florida. Florida. Dear God. Homes are piling up. Realtor.com reports 40% spike in homes for sale. And 3 weeks ago, the devastation in Florida is massive. FEMA is running out of money. All right, well, that's where we're at as far as Reventure Consulting is concerned. And I'm sure they're going to get a lot more views than I ever will. That's okay. I like them. Now let's go over to our friend Michael Bordenero, who again is an active real estate agent. I know he does not sell real estate anymore. He's a full-time YouTuber. So the intent of this video is to entertain and get eyeballs. That's how he's monetized. And I've done a consultation with him before. If you go to his channel, you can buy one too. Nice guy. Nothing bad to say about him, except if you believe the things that he's saying and you don't do any research, well, chances are you have no idea what's actually happening in the market. But I stole his title. Who still wants to live in Florida? Except I'm going to counter this. Well, I'll tell you exactly who those people are first and foremost, because almost all of the business I do is driven from people who find me on YouTube. And if you've been watching for a while, you know that I don't have any leading indicator. There are lots of indicators that I can follow. There's lots of data that is disseminated and reported by different real estate organizations. And the MLS will continue to, or the local real estate organizations will continue to publish data on a monthly basis, but it will always be a month late. So everything that you see from the realtor associations is always lagging. And what I'm about to share with you is not, it's real time. But Michael doesn't really sell real estate. He sells YouTube content. And so that's all well and good. But if you believe that nobody wants to move to Florida, I'm here to tell you, I got 10 phone calls this week from people who do. Now, I will talk about I won't talk about them individually, but I can tell you what they all have in common. And I can tell you what their budgets and their credit looks like. I can tell you these are wealthy folks that are moving from a place they don't want to be in anymore, and they do want to be in Florida for all the reasons everybody wants to be in Florida. But he goes on to say, Florida massive insurance fraud confirmed. You may have seen my videos on them too. Yes, the Florida insurance market is a disaster. And I'll do a deep dive on that. I've done many in the past. I don't want to get bogged down on that because we'll be here all day. Missing the housing market deadline will be permanent. Permanent. And FEMA's broke billions in uninsured hurricane losses. We can go on and on about all the doomsday predictions that both of these channels and many others have made, but the only thing I can do that's going to give you any real truth or potential clarity is share what the actual numbers are. Now, today, an hour ago, I just got, and you can see it here. Am I sharing it? Let's see. Am I doing this accurately? Yes, I am. Oh, we got comments. I was in the wrong screen. I can tell you the perception. Everyone is broke, investor fire sale, inventory skyrocketing. Yeah, that is the perception. Second half of baby boomers born 55, 64, much less prosperity. That is also accurate. Home insurance, property taxes skyrocketing. Yes, Gordon Arrow's econ analysis is very good. Well, perhaps it is, James. We'll see. Let's look at what the data reveals because the numbers don't lie. Saltwater intrusion into the water table. Florida will become a ghost state. Whoa, spooky on Halloween. It's going to be a ghost state. Well, where's my Ouija board? Because we'll see what the ghost analysts have to say. But I like your comments. Thank you for sending them, sharing them. And let's see. Look, I'm not here. I don't have a fight. I don't have a dog in the fight, right? Maybe what Michael Bordenero is saying is true. Maybe what Reventure is saying is true. I am not a Ouija board. I don't have a crystal ball. Neither does anybody else. And what I do know, and I can certainly make a case for, is there have been governmental interventions going back to when they took the dollar off the gold standard that were all terrible decisions, which will eventually catch up and bite us in the ass economically. Many of that ass, or much of that ass biting, continues to happen to this day. And I don't think anybody's surprised to learn that election day is coming up soon. What I can tell you about the election is this, and most people don't share this, but the reality is, irrespective of whomever it is that gets elected, it will have zero economic impact on me personally. And I believe it will have zero economic impact on anyone who is accountable and runs their own business and figures it out. Because it was irrelevant who was president as far as my personal production as whether it's a real estate agent or a stockbroker. And those are the only two industries I've ever been in outside of when I was a kid. And I had side hustles and things like that to make money. But I've always had an entrepreneurial spirit. So I'm not concerned about who gets elected. From my selfish perspective, I'm very concerned about many things that might happen for future generations. So vote, as you can see, I got it written on the board behind me, and I'm not going to go overboard and put on my American flag jacket because I don't want this to be political. But the reality is, you got to vote. It is your duty, I feel it's my civic duty to do so. And with that, we'll jump off of this topic. But I do want to talk about this email that I just got from Calculated Risk Real Estate News. Freddie Mac House Price Index increased in September. Again, we're in October, up 3.6% year over year. But the interesting part of this article, which I'm going to share with you right now, is that 17 of the worst performing cities are now in Florida, at least as of last month. And 9 of the 12 worst performing cities are in Florida. And I don't know where they got this information from. I have no reason to believe it is not correct, but let's just look at what that is. Core-based statistical area, Punta Gorda, changed from peak. Again, it's seasonally adjusted. I don't know what they are using as the peak, but let's just take it as gospel. It's down 11.5%. Cape Coral, Fort Myers is down 7.8%. Northport, Sarasota, Bradenton down 5.2%. Sebastian, Vero Beach down 4.5%. Crestview, Fort Walton Beach, Destin down 4.3%. Ocala, 4.2% down. Panama City down 4.1%. The Villages down 3.9%. Sebring, Avon Park down 3.7%. Again, this is from the peak. So am I surprised that there's a consolidation to the downside? No. Do I know if these numbers are accurate? No. I didn't source them myself. What I'm going to share next is real-time information, which is happening right now. So as of yesterday, all of the data that I'm going to share is accurate and 100% real-time. Well, no, it's a day late. Day late, not a dollar short. All right, where were we at? Sebring, Avon Park down 3.7%. Palm Bay, Melbourne, Titusville, 3.6% to the downside. Daytona Beach, and Ormond Beach down 3.1%. Tampa, St. Pete, Clearwater down 3.1. Homasa, Homasa, Homosassa, Homosassa, home of the Homosassians, down 2.9%. Lakeview, Winter Haven, Florida, down 2.8. Jacksonville, down 2.5. And Tallahassee, down 2.3. Scary numbers. Except this is from the peak, which again, I don't know what they're using this. I don't know what they're using as the peak, but am I surprised? So depending on when you bought, if you bought at the peak, well, then you're none too happy. If you bought prior to the peak, chances are you're probably still sitting on a metric shit ton of home equity. Now, home equity is not real until it's realized. It's kind of arbitrary. Oh, it's not an arbitrary number. It's just not real, right? So it's kind of like an unrealized gain. You have this gain in your house that doesn't mean anything to you unless you sell or you refinance and you pull the money out of the house, use the house as a piggy bank, which will a lot of people are doing for the record or have already done for the record. And that will only lead to more disaster over time as the pain of well, we're not in a recession according to any of the numbers that you see, right? This is a soft landing. But I suspect the soft landing that we think we're seeing is not real. I think many of the metrics that are being shared by the government is not accurate. And I think there's going to be massive revisions to the downside after the election. But in the interim, what do we have? We got breaking news. Key inflation. This just came out today. Key inflation rate hits 2.1% in September as expected, closing in on the Fed target. Wonderful news. The Fed is winning the day, right? Maybe, I don't know, yet to be determined, but it goes on to say initial filings for unemployment benefits totaled 216,000 for the week ending October 26th, a decrease of 12,000 and below the forecast of 230,000. Well, isn't that great news? Inflation is getting better, except inflation compounds. And I don't believe any of the numbers, as far as employment are concerned, are accurate. But this must be good news, right? Because everything that they're going to put out economically right before the election is definitely not window dressing. It's definitely accurate, right? I would have to imagine so. Yet there are many folks, many real estate professionals who really thought that when the Fed intervened and cut Fed funds rates, well, then we were definitely going to see mortgage rates dip down to 5 or lower. And it was going to be a boom in the real estate market, right? Because now financing would be much more affordable. And yet, while it did happen for a short period of time, it seemed like almost instantly after a brief downtick, it started to uptick. And why is that? Well, I don't need to read the article to tell you, having been in the financial services space, I know that what am I doing here? Banks are in the business of lending money and they get that money from various sources. And when the Fed cuts their Fed funds rates and makes it more challenging for the Fed because who they're lending it or who they're getting the money from, when the delta of their profit becomes less, well, then they pass that on to the consumer, which is you and me and anybody else who's looking to get a mortgage. So it didn't have the impact that everybody thought it would, besides me. Instead, it just drove because the banks can't get it at such a cheap rate anymore. They now have to pass that on to you. And so mortgage rates are not going to shock me when they're at 8, 9, 10%. I expect that they're going to be significantly higher than where they are now. And we have a case study on this. Look at what they traded at in the 80s. Look at what they traded at in the late 70s. And my parents' first mortgage, I believe, was at 18%. So if you don't think that's possible, well, you're entitled to your opinion. I just don't agree. Which takes us to, let's see here, our next screen that I want to share. Pending home sales took an unexpected leap higher last month, but rates have climbed back. All right, we already covered that. I'm not going to spend a lot of time here. But what I am going to share is, again, I was just in Miami Beach, right? And a lot of folks believe that Florida is just simply, let me go back to the comments here so I can read them verbatim. James Waters, Florida done. Yep, Florida done. Cryptocurrency theory. Yes, you're right. They follow the 10-year treasuries, which are rising, which is why so are mortgage interest rates. I was trying to say that in less technical terms because I find when I get too granular, I lose half the audience, but you are 100% correct. The Sunshine States get more thunderstorms than any other state in the nation. James, I hope that for Halloween that you wrap yourself in bubble wrap and hide under your bed and are very safe because yeah, we have hurricanes in Hurricane Alley and we have thunderstorms in Florida. So because of your theory, most people will not want to build homes or properties or develop Florida because it's going to be underwater, right? Let's see, because I was completely shocked to learn that two condo towers will offer nearly 800 residents in Florida, in Fort Lauderdale to be specific. They are anticipated to begin in 2025. Well, let's see here. A 43-story luxury condo towers with 775 residents and more than 11,000 square feet of ground floor retail. That's a big project. Why would a developer be developing in Fort Lauderdale where the pricing is going to start in the 400s for studio apartments, excuse me, apartments, and the top range is 5 million for penthouses that offer views of the ocean, which is about a mile away. Why would these folks deploy money into this ghost town waiting to happen? Why would they do that? They must think that there's going to be a rate of return they're going to get on their investment, and there is very scarce land to develop. But Fort Lauderdale is a prime place in which to do so. And so builders are going to do what builders do. They're going to deploy money in areas in which they think they're going to get the highest rate of return. And what do we see? Fort Lauderdale is benefiting from that. What else do we see? Well, this is a little bit closer to home for me, but if you've watched for a while, you know I've talked a lot about there are areas of land that have not been zoned to be developed. They have been zoned to be agricultural land. They've been zoned to be preserve or reserve land. And yet the builders in my market are challenging the county on a regular basis. And years ago, I did driving tours showcasing what that land looked like and pointing out to anybody that I could. See that farm over there? See that farm over there? See that plot of land over there? Well, that's a tree farm. None of that is going to be that in 10 years. And it hasn't been 10 years, and everything I said is predictable and right. It's all going to be sold and developed. And I don't want that as a resident. In fact, I think it's a terrible idea. But what I think and what the market wants are two different things because the market is always right. The market doesn't care what I think about anything, doesn't care what you think about anything. The market will always function unless there's some sort of government intervention, which I pray to God doesn't happen. But the market and cash will always seek its highest value. With that, we've got the county approving GL Homes plans for nearly 500 new homes in West Boynton. That is where I live, West Boynton. So they're going to continue to build out as much as possible. And these build outs are luxury homes. These are luxury resort style communities with sick amenities, but these are pricey. And GL Homes builds a luxury product, builds a luxury neighborhood with resort style amenities that are similar to a golf club or a country club, but without those fees. The annual fees, they're priced into the homes, they're priced into the HOA. I know everybody hates HOAs, or most people hate HOAs. In my market, they're common, and GL builds one of the best neighborhoods and products that exists. I just don't want that on farmland. I prefer it stay farmland. Nonetheless, Palm Beach County has approved it, and Lotus Edge in West Boca is under construction, as well as the 12th Valencia branded active adult community. So there will be, and you can see it here, woo-wee, all of this map. And I talk a lot about my neighborhood Canyon Trails. This is the Canyon Enclave from an aerial perspective, but all of this land here, which currently is not developed, will be. And that means those farms or those preserved lands or whatever it is going to be sold and developed. And infrastructure wise, I know that the roads right now can't handle the demand or the capacity that they have. So there's going to be lots of development in West Boynton. There will be more development in West Boca. There will be more development in all of these areas, and all of that is going to be pricey. So if you want to know who is buying in my market, because nobody's buying in Florida anymore, these are folks that have a measure of wealth sufficient to buy whatever they want whenever they want it. And maybe that came from selling their home up north or somewhere else. Maybe it's coming from international, a different country altogether. Doesn't really matter where it comes from, in my opinion. It's just, it is what it is. It's pricey to live in these areas. And I don't see that changing anytime soon. So that is the reality of where we're at for right now. Again, I'm going to share the real numbers here in a second, but I just want to make sure everyone understands that the perception of Florida being underwater or suboptimal is total horseshit for anybody who's got money. And lots of people still have money, which doesn't mean that it's fair, doesn't mean that inflation isn't hurting people, and doesn't even mean that residents within my own market aren't fake rich. There are lots of folks in my market who are living above their means. And as the pain of the financial crisis I see coming, as the debt continues to mount, debt will eventually eat equity. And I can't predict what's going to happen in the stock markets or in any other markets, but I do know we've been on a bull run for a long time, and it will not surprise me if the canary in the coal mine, not cold mine, is a stock market crash that scares the shit out of a lot of people. And people don't take action until they're in pain. People typically don't take action until they're in trouble and afraid. And that's why most lawsuits get settled at the courthouse steps. But we've been on a massive bull run for a long time. Debt is at higher levels than it's ever been. Credit card debt is at higher levels than it's ever been. There haven't really been an uptick in distress sales really in any of the markets that I cover. But I do know there are lots of people who are on the threshold of being in real trouble. They may be sitting on a metric shit ton of equity, but they've got car notes, they've got debt, they've got other issues, and maybe their income is not keeping up with inflation or their debt cycle. Well, those folks are going to be forced to sell at some point if the balance doesn't correct itself. And I don't think that's going to happen anytime soon. In the interim, we got $2 billion being sunk, if you will, into a marina development, which aims to turn Fort Lauderdale into a mini Monaco. Is Florida and is Fort Lauderdale going to become more elitist? Probably. And will the areas around South Florida continue to be developed at a higher level and at a higher rate than they are? Yeah, probably. And what does that mean? It means normal folks are going to get squeezed out, and that sucks. But it is what it is. The reality of where we're at and where we like to be, that delta is irrelevant because I don't control that. What I want and what I get are typically two very different things. Now, with all of that in mind, let's get into what the numbers are. And thank you for enduring my relentless tirade. But let's start in Dade County. And to be clear, we're going to cover Dade County, Miami Beach condos and surrounding area. We're going to cover Broward, Fort Lauderdale, Coral Springs, Parkland, and surrounding areas. We're going to cover Palm Beach County, Boynton Beach, Boca Raton, Delray Beach, Wellington, Jupiter, and a few other cities in the surrounding area so that we've got granularity as to what it looks like right now in real time. when we're in Boynton Beach, I'm also going to go into the canyons. I shared the slide earlier of the uh, of the cluster of homes, the enclave. That's what I was looking for. The enclave of canyons, canyon lakes, canyon isles, canyon springs, canyon trails. I want to go do a deep dive into that market because that's the main market that I service, and hopefully you'll find that valuable. But let's start with Dade County. Let's look at the condo markets. Let's look at Miami Beach because I was just there, and I couldn't help but notice the amount of cranes that were, in effect, that were currently building and developing whatever it is they're building and developing. But let's start with supply, right? So you can't help but notice this light green is supply and the dark green is sold. These numbers tell me that there's a massive imbalance between supply and demand. Supply and demand will always dictate price. Period. End of story. So if there is a massive supply and there's very little demand, you can expect that prices are going to reflect that. So as a buyer or a seller of any type of product ever, I want to create, and you should want to create, leverage sufficient enough to give you a competitive advantage in either of the two things that you're looking to do. And I found, as a boots on the ground operator of a high performance real estate team, we can always find a way to create leverage depending on what it is that you want, right? So if you ever are thinking about buying or selling and need help anywhere within the state of Florida or really anywhere else, please reach out. I will connect you. If it's not something I can do personally or my team can't handle, I will connect you with an all-star that understands how to use leverage, sees the market the same way I do, in order to ensure that you get what you want. Because ain't nobody overpaying on my watch. And ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else if you must sell. We create a market within a market, which will inevitably lead to multiple offers that bid the price higher. But I can promise you, right now we're just looking at condos and the uptick in inventory. That becomes much more difficult to do when there is much more inventory on the market. But right now we're talking about Miami Beach condos, and you can see current versus previous month to date. I'm not going to go backward looking. I'm just going to stay real time. For sale in the period of October up till the 30th versus that same time period in September, you can see an uptick of almost 5% in terms of condos that are listed on the market for sale. You can see a downtick of sold properties in that same time period, down 3.3%. And the pending transactions is down by almost 18, actually 18.4%. So no bueno if you're thinking about selling in that condo market, right? But let's look at the average sold versus active or average active price, right? So the average sold price, and let's actually start backwards. September versus August, the average sold price was down 12.2% for a condo in Miami Beach. What we can see in October is there's been an uptick of 5.2%, 807 versus 767. Still, no bueno if you bought over here at or take that back. At any point higher than that, the 12% loss probably is a big pain point for you, right? The fact that you lost 12% in September and August, then it's back 5.2%, probably not giving you a warm, fuzzy feeling if you own a unit that's for sale. Probably makes you feel a little bit more like you have more leverage because you do if you're thinking about buying a condo in Miami Beach. But let's look at the month supply of inventory. And not surprising because we looked at the first slide, there's been a massive uptick in inventory. And September versus August, it was an uptick of damn near 37%, 20 months of inventory, 20.4 months. Well, the same period, October versus September, it's up 4.7%, 20 plus months of inventory versus 19.3. No bueno if you're selling a condo in Miami Beach. Lots of competition, lots of inventory, very little leverage if you're thinking about selling. And I suspect these dynamics eventually are going to catch up with everybody everywhere at some point when the pain of whatever the financial crisis might be is sufficient to make people get out of their homes because it's their only option. And that's going to take a lot of pain, but we're in pain season, we're in volatility season. And it's simply, that's not what I want, but what I want and what I get are two different things. Let's see here. We'd like to know about Port St. Lucie. I will cover Port St. Lucie here. Thanks for sticking with me. This is way longer than I thought it was going to be, but that's okay. I'm committed to you and making sure you know what's going on. Joe, thank you for the compliment. I appreciate it. Houses in my neighborhood, 33312, are down almost 20% due to a couple desperate sellers. Prices made at the margin going dirty because insurance is half of a social security check. Yeah, Edward, that sucks. I believe you're right. There's a lot of folks that are going to be squeezed. A lot of fixed income folks that are in condos throughout the state of Florida. You know, on a macro level, I know for certain that there are many, many condo buildings around the coast of Florida. Maybe not in my market, maybe not in Palm Beach County, but definitely Broward, definitely Dade, definitely other markets. I think Palm Beach is one of the few that's in front of the structural requirements and the 40-year inspection that must be done. They've paid these off already, and most of that inventory, which is subject to those requirements, they're already in front of it, but that's not everywhere, right? So if you're on a fixed income and if you're relying on Social Security and suddenly you get hit with this massive assessment, there are a lot of folks that are going to be in trouble. And unfortunately, I mentioned the developers that are going to build these buildings in Fort Lauderdale. I think there's going to be lots of institutional money, lots of opportunistic investors, hedge funds, quote unquote, institutional and or smart money, to the tunes of billions or trillions of dollars that will be deployed scooping up those distressed buildings. Because if the condo can't come up with the funds sufficient to restore or fortify or comply with whatever the terms are, the law is, well, then that asset, that building, is subject to an investor coming in, redeveloping it, and really hurting a lot of people who are at risk because they're in fixed income situations. And that's unfortunate, but it is what it is. So, all right, so that was Miami Beach. Let's get back into the numbers. Let's see here. Sunny Isles Beach, which is a interesting market. It is a very nice, very expensive place to live, but I'm curious what it looks like in terms of inventory. And wow, these are not Surfside, but Sunny Isles Beach is a fantastic place to live. Lots of new buildings, lots of new resort style buildings right on the beach. It's a very nice lifestyle. It's also very expensive, but let's look and see what happened in terms of current, meaning current versus previous month to date. October for sale, you got 1,017 versus 1,033, down 1.5%. The sold, so look at the amount of inventory versus what's sold. And you can see that demonstrated in the light green versus the dark green bar. It may be the nicest place to live on planet Earth. Yet, if there's massive supply and no demand, prices eventually are going to be on the downtick in a big way. And if you can't see that from this chart, I don't know how to help you, but supply and demand will always dictate price. What you notice is 3% less sold October versus September, and pended is up 4.3%. But 48 versus 46, when there's 1,000 plus units for sale, is it's nice that it's an uptick, but it's not meaningful enough to mean anything. So let's look at what the average price versus sold price is. And what you see, September versus August, the average sold price was up almost 29%, which is almost shocking given the previous slides. But once again, you see it in October, it's up 32.1%. So despite the amount of massive inventory that is on the market, we've got double-digit gains in both months to the tune of over 50%. That is a shocking number that is not going to be what it's like in other markets, right? So Florida is going to be an outlier for the country, and different areas of Florida are going to be more insulated from what happens in other markets. But please know that every market will trade independently. There will be a different velocity of supply and demand, no matter where it is that you're shopping. And it is critically important that you understand what the dynamics are of supply and demand, no matter where it is that you live, where it is that you're thinking about moving. You need to know these numbers granularly. And to be clear, this is not granular. This is still macro. This is just the condo market overall in Sunny Isles Beach. If you wanted to know exactly what it's like in a building or in a community or on your street or in any area, that needs to be drilled down to granularly if you're thinking about buying or selling anywhere. So if you need help with that, we can always help. And if it's out of my wheelhouse, then we'll refer you to somebody who can. But please understand that these numbers are macro. They are not 100% accurate at all. As you go to a granular level, they're going to change 100%. So just know this is a macro number. All right, I did Sunny Isles. I don't want to spend a whole lot of time in Miami, as I don't really support the condo market there. Not that I can't, I just typically don't. It's an hour and a half away and not my wheelhouse. All right, so we've done Dade County. Let's do one more. Let's look at Surfside, and I use Surfside because that is where we had the building implode. That's where we had the massive condo crisis, and I'm curious what the market looks like now. So we are in Surfside. We're looking at condos. You can already tell massive disparity between the amount of homes that are for sale versus what's actually sold. Let's see how that translates to price. But you had 114 units for sale so far in October versus 103. That's up almost 11%. Sold previous or current versus previous month to date, down 100%. Pended up 100%. So this is a smaller market, obviously, based on the numbers relative to the other two cities that I shared. But let's see what the numbers translate in terms of price. Holy moly. All right. So average sold price, September versus August. Again, this is where a building collapsed, imploded, because it was not structurally reinforced the right way, because the building, the condo board neglected to spend the money to bring it up to speed. It imploded. Well, the average sold price exploded 250%. 2.531 versus 723, and average sold price is zero because there have been no sales so far in October. But if you look at the average active price, it's indicative of a very expensive market. So the average active price on the market in Surfside for a condo is $4.482 million. Wow, that is a whammy. But month supply of inventory is down 40% in September versus August, 25.8 months versus 43.5. Massive, massive buyer's market. And months of inventory closed, there is none. So it's down 100%. But as you can see in the previous slide, there is a massive amount of properties for sale in that market. But massive is a relative term because this is a small market. All right, so only 110 or 115 units for sale in that market, but again, it's a small market. So this is not indicative of what's happening everywhere. It is a macro picture of what's happening in the Surfside condo market. All right, so we've gone from there to, let's jump out of Dade County. Let's get into Broward, and in Broward, what have I done? We're going to look at cities. We're going to look at, let's start in Fort Lauderdale, and let's look at condos, because we led with that story of condo development. let's see what the condo market looks like. And what you can't help but notice is the light green is way bigger than the dark green, which is going to tell me supply and demand are completely out of kilter. But you got 1,309 properties for sale in Fort Lauderdale, up 4.4% versus the 1,254 in the same period in September. The sold units are down almost 10%, 76 versus 84, and the pended are down 2.1%, 93 versus 95. Now, let's see what that reflected in terms of price. And you see the average sold price, September versus August, is down 2.3%. The average sold price in October versus September is down almost 9%. So 545 versus 596. There are lots. There is robust. There is a tremendous amount of inventory. And you can see that in the next slide. Month supply of inventory, September versus August jumped 52.9%, 16 months of inventory. That is a buyer's market. And it upticked even further, 12.1% October versus September, 16.7 months. Now, let's just run the numbers based on the economic reality of what's happening right now in terms of inflation and increasing mortgage rates and insurance costs and all the things that nobody wants to think about. But the reality of what's happening right now, when you've got that much supply of inventory in Fort Lauderdale, chances are you're going to see prices downtick exponentially at some point. Because I know many of those, in fact, I had a friend who lived right off of Broward Boulevard in one of the prime newer buildings that was actually at the time when he bought it, it was pre-construction. But the condo fee to live there on a monthly basis was $800 a month. This is years ago, so that number has only gone higher. It's not uncommon for buildings that are premier buildings in Fort Lauderdale that are downtown, that are near the beach. You're getting a $1,500 monthly condo fee in addition to whatever other cost of living things you have in your life, like a mortgage. Many of the folks buying these properties are international and they pay cash. So if you have a mortgage in one of these buildings and you're on a fixed income and you're getting hit with a monthly fee that increases 30% to keep up with the insurance costs, well, chances are it's only a matter of time until you're in trouble financially. So I don't suspect that the condo market in Fort Lauderdale is going to get much better for most people currently living there, but it will be the wealth and the population will be redistributed by wealthier folks who are coming into newer units, newer buildings, new products. And we're going to see a lot of that throughout Southeast Florida. That will be a theme that continues for, I can't tell you how long, but it won't shock me for that to be what happens. And unfortunately, that's the reality of what's going to happen in most places here in South Florida. But I also have to say that with an asterisk, because there's just simply no land to develop. So when there is a scarcity of resource, and forget about these numbers that I've shared, although they are real, it is what's happening right now. When there's scarcity of land and there's tremendous demand from other places to be on that scarcity of land, chances are you're going to continue to see prices uptick in a big way. And that's what we're seeing in areas that were much more affordable not that long ago. So West Boynton, when I lived here, was a very nice place to live, but you could buy new construction in Canyon Trails for in the threes. Now you can't even find a starter home in Canyon Trails under ballpark figure 600, right? So doubled from a few years ago. And that's not an improved house. That's a dated, older home that if it was updated, you probably get something closer to 800. But that's the reality of the inflationary environment that we live in right now. And they're developing the shit out of West Boynton, as I already shared. But there's a lot more that's happening besides that. There's just massive development happening everywhere at the expense of the environment, at the expense of the local population. And it will not surprise me if this trend continues to go more northernward. And we're already seeing that happening. Springs. So the Fort Lauderdale used to be affordable. Then it was Coral Springs. Then it was Parkland. Then it was Boca. Then it was Boynton. Then it was, and it's just working its way up the coast until the entire state is a parking lot. But I'll be dead by then. Okay, so we did Fort Lauderdale condos. Let's look at single family homes. And then, come on, baby, let's go. All right, so we're still in Fort Lauderdale, and then we're looking at residential single family homes. All right, you can see lots more supply than demand, and that is indicated down here. So October up till yesterday versus September up till yesterday, the 30th. You've got an uptick of for sale homes, inventory sitting on the market, 934 versus 893, an uptick of almost 5%. The sold properties uptick by 2.4%. The pended properties, meaning under contract for sale, is down 23%. No bueno. And when we look at the pricing on that, what you can't help but notice is it's almost a wash. September versus August, it's down 16%, 896 versus 1,066. And now taking it to current times, October versus September, average sold price up 13.6%. So almost a wash in terms of the delta between the two, and 1.19 million versus 897, uptick of 14%. Well, that is what it is, right? So if you're looking for a single family home, and again, notice the difference between the average active price versus the average sold price. There's a massive disparity, but keep in mind, this is a macro number, which means it encompasses everything. And there are definitely homes in Fort Lauderdale that are under $1,019,000, but the bigger numbers skew these averages in a massive way. So if you're shopping for a home in Fort Lauderdale, know that this is not an accurate number. This is the overall macro trend of what we've got right now. If you want to know granular, then please reach out. Fort Lauderdale is in my wheelhouse, and we'll get you set up right away. But the macro number is no bueno if you're thinking about buying. All right, month supply of inventory. This is bueno if you're thinking about buying, because there is a massive uptick in supply, right? Up 40.3% September versus August, 7.3 months versus 5.2, and it's flat in October so far. There's one more day in the month, and I will not have access to that because on the 1st, you lose access to the previous month, which is why I'm doing it today. But 7.1 months of inventory. Overall macro for single family homes in Fort Lauderdale is definitely a buyer's market. And if you're shopping in any of these markets, know that when you get granular, you will definitely have different metrics, but you must know what supply and demand is if you're thinking about selling, in order to create a market within a market, which will create an opportunity for you to find the one buyer on planet Earth willing to pay more than anybody else if you're thinking about selling. And if you're thinking about buying, well, then we'll use the supply leverage to your advantage to get you a discount. But supply and demand will always dictate price. That's Fort Lauderdale, and now we are done. Moving it right along, let's look at, where am I? Coral Springs. Coral Springs. I love Coral Springs. I used to live in Coral Springs. I grew up in Coral Springs, amongst other places. So Coral Springs is definitively in my wheelhouse, but this is interesting. So far this month, we've got a decrease of properties on the market, down 7.2%, a decrease in sold properties to the tune of 19%, and a decrease in pended homes, single family homes in Coral Springs, to the tune of 5.3%. So downtick across the board. And unlike the other charts that I've shown, which had a massive disparity between the light green and the dark green, there's still a disparity. There's obviously more supply than there is demand, but it's not as big, it's not as obvious as some of the other places. And that's reflected in price. So average sold price September versus August, down half a basis point, 724 versus 728. And average sold price is up 2.1% in October versus September, 738 versus 723. All right. And again, notice that the average active price, there's a big disparity, although nowhere near as wide as some of the other markets. But the average active price is 805 versus 813, which is down 1%. So sellers and buyers seem to be more on the same page, but Coral Springs is also more homogenous in terms of pricing. So in Fort Lauderdale, there are massive outliers that skew the market. And in other places within Palm Beach, there will be massive outliers which skew the macro number. But you must know what's happening in the market you're shopping in or thinking about selling in order to make an informed decision, which gives you or has the potential to give you a competitive advantage. And typically, not typically, we are always going to be able to give you the most competitive advantage, irrespective of what market conditions are. So let's see here. Month supply of inventory tells a similar story, but what you'll notice is that unlike before, where you had north of 5 months or 6 months, in some cases you had double digit months, in some cases, I think it was 20 plus months. Here it's only 3.5 months in September versus August, which was an uptick of almost, well, I can't round up to 10. I have to round down to 9, but 9.3% uptick September versus August. And in October versus September, an uptick of 9%, 8.7 to be exact. 3.8 months of inventory is a seller's market. So that's great if you're thinking about selling. It's probably not as great if you're thinking about buying. However, asterisks, this is a macro number. So depending on where you're shopping in Coral Springs, these numbers will be very, very different. So just know that you need to know exactly what's happening where you are shopping or thinking about selling in order to get a competitive advantage. And let me look back in on the comments here. Overcrowding is everywhere. Yes, that is unfortunately true, and that is only getting worse. But let's go back into the numbers here. So we did Coral Springs. Let's look at Parkland, another place that I used to live. Actually, no, I got to hit Plantation. I remember last live stream, Silvio asked for Plantation. So I suspect if he's not on it now, he will want to know what's going on in Plantation. So let's start and give a overview here. In Plantation, for single family homes, what you'll notice September versus August, an uptick of 7% in the average sold price, 824 versus 772. And in October versus September, an uptick of 9.3%. So 891 versus 815. Great news if you are thinking about selling, probably not so bueno if you're thinking about, did I get that right? If you're thinking about selling, probably not so good if you're thinking about buying. But let's see what the inventory reveals. And if I got that wrong, let me know in the comments because it was not intentional. Month supply of inventory on the uptick, 11.1% September versus August, 4 months versus 3.6, and October thus far, an uptick of 15.3%, 4.5 months versus 3.9, still a seller's market. And again, this will change depending on where you're shopping in Parkland. There are lots of communities that I can think of off the top of my head, specifically in Heron Bay, where there are lots of let's go to pricing again. Curious what the average price point is. It's not as bad as I thought. So the average active price is 1.1 million. Let me just make sure I'm in the right place. No, I'm in Plantation. I thought I was in Parkland. I really screwed this up. I am lost in the sauce here. So disregard most of what I just said because I thought I thought I changed to Parkland. We are in Plantation still. So rewind. Yeah. So average sold price in Plantation. I think I covered this is 891 versus 815, up 9.3%, and month supply of inventory is upticked to 4.5 months. I think somehow I mentally fast forward and thought I was talking about Parkland. No, I was talking about Plantation. Right. Now we'll do Parkland. So Parkland is in West Broward, and it is a pricier place in Broward to live. So the average active price in September versus August is down 3%, 1.52 versus 1.548. Average sold price up 4.1%, 1.292 versus 1.241. And in October versus September, those numbers change a bit. The average active price is up 7%, and the average sold price is down 3.4%. So basically a wash in terms of average sold price. But I know now I'm talking at the right time, at the right place. There's a lot of luxury inventory in certain communities in Parkland that are very different than this, right? And so I know there are a lot of high priced homes that, or more expensive, pricier homes that have been sitting on the market unsold for a long time. But month supply of inventory up 35% September versus August and up 2.4% in October versus September. Still a seller's market overall from a macro number. But as I mentioned, if you're shopping in Parkland, if you're thinking about selling in Parkland, best to know what's happening in your hyper local market, because I know for certain there are massive disparities that are very different than what we just shared right here. All right, that's Parkland. Hopefully, I didn't confuse everybody too much. Let's see, is there any other place in Broward anybody wants to know about? Scrolling back. No. Okay, so I believe I've covered everything everybody wants to know in Broward. And now let's get into Palm Beach County. Palm Beach County. Yes, we will. And we're going to start off in Boca Raton. We are going to look at single family homes in Boca Raton and get ready to see the prices jump. Okay, so Boca Raton, this is real-time information. And I know somebody mentioned they're thinking about moving to Boca. So the average sold price, September versus August, was up 1.6%. And Boca Raton is pricey. And Boca Raton has outlier communities, which are going to skew these numbers to the upside in a way that will distort what the actual market in Boca Raton is. I can promise you that there are homes for sale that are significantly less than this in Boca Raton, but they're skewed by the high price point areas. So it is critical to know exactly where you're shopping or thinking about selling, because if you just get sticker shock from this, you may think that that's what the market is overall. I'm here to tell you that's not true. But it is true that Boca Raton is a very wealthy place to live. It is a very expensive place to live, and the numbers demonstrate that better than I ever could. So average sold price September versus August down 1.8%, and October versus September an uptick of 4.4%. So the average sold price in Boca Raton is 1,723 versus 1,651. Compared to, again, this is what's sold, this is what's actively listed. There's a pretty big delta between the two. And again, that has a lot to do with the massive disparity of pricing that exists in certain communities within Boca. That theme will stay true throughout Palm Beach, throughout Delray at Boynton Beach and Boca Raton. In some of the other places, it may be less distorted, but Lake Worth has a measure of that. Jupiter has a measure of that. And not every place has the same magnitude degree of difference or velocity of difference, but we'll continue to work through the numbers. Supply side, month supply increased 19% September versus August, 5 months versus 4.2, and in October, 5.8 versus 5, up 16%. So again, if you're looking for deals, if you're shopping in Boca Raton, well, you want there to be a tremendous amount of supply, because then you've got more leverage to negotiate a better deal. And if you're thinking about selling, and I'll say this differently, if you are on the fringe of financial viability in your life and lifestyle, and you think you must sell, you do not want to be in front of the freight train of inventory that I believe will get squeezed onto the market if financial conditions and economic conditions don't improve. If they don't improve, I think that you're going to be run over by the massive influx of inventory that is likely to hit the market as the pain worsens. And I think it's going to worsen. But I also believe Boca Raton is more insulated than other markets, but supply and demand will always dictate price. This is a macro number, so just know if you're thinking about doing anything anywhere, you need to know what the hyperlocal market is, that the market dynamics are wherever it is that you're shopping or thinking about selling. All right. And again, this is real time. So you'll get the actual, you'll get the lagging numbers from the MLS and most other agents next month. So best to know in real time and never look at anything that's lagging. That's Boca. All right. Let's go to Boynton. Boynton Beach. I love Boynton Beach. I love living in West Boynton Beach. There are areas of Boynton Beach I would not want to live, but West Boynton is very different than East Boynton, is very different than Central Boynton, and every market will be different. So this is the macro picture for all of Boynton. There's a massive price disparity between East and Central versus West. West tends to be newer. West tends to be better infrastructure, schools, and retail, a better lifestyle of living that most people and families seem to appreciate and enjoy. Hence the reason why GL Homes is building all over the place. But what you'll notice in Boynton Beach, September versus August, average sold price uptick 0.2%, 598 versus 597. And in October, it's 623 versus 606, an uptick of 3%. So prices seem to be on the uptick so far in Boynton Beach, and these numbers are going to change radically when I get into the Canyons Enclave, which again is in Boynton Beach, but it'll demonstrate with certainty how different the hyperlocal market is versus the macro number. Month supply of inventory is upticked September versus August, 36.5%, and decreased almost 8% October versus September, 4.8 months versus 5.2. 4.8 is still a seller's market, not a particularly strong seller's market, on the fringe of being a buyer's market. But let's see what a hyper local snapshot looks like and get into the Canyons zip code. 33472. And all of these numbers are going to change. All right. Is this correct? No, 33473. As soon as I saw the numbers, I realized I was in the wrong zip code. Okay, so let's show the chart. All right, so we can already see that the sold is breaking out to the upside through the for sale. So prices are going to reflect that. I would imagine the average sold price in September versus August is up almost 24%, 1.192 versus 963. That's September versus August. October versus September, down 3%, 1.181 versus 1.218. But the massive, again, there's volatility. We're going to continue to see volatility. We're going to start feeling more pain. And as we do, all these numbers are going to change. But the month supply of inventory will tell us what we need to know. 5.4 months versus 5.6, down 3.5%, September versus August, and up 4% October versus September. Really not much of a material change in terms of inventory within the canyons. If you compare all 4 months or all 3 months, but it is what it is, right? So 5.2 months, still a seller's market. And although this is a hyper local snapshot, the zip code is not indicative of what's happening in Canyon Trails versus what's happening in Canyon Isles versus what's happening in Canyon Lakes versus what's happening in Canyon Springs. They are all different markets that exist within 33473. And there are also other communities that are luxury 55 plus communities within this zip code. So just know this is, although this is a more granular number, it's still not accurate if you're thinking about buying in one of the individual Canyon communities or within one of the Valencia communities that are right next door. There will always be, I can always get more granular down to the street if needed in order to give you a competitive advantage if you're thinking about buying or selling. And that statement holds true no matter where we are. This is still a macro number, although it is more drilled down, it is more granular, it is more instructive. It's still not what you need to know if you're thinking about buying in a particular community and or street. But that's as far as I'm going to go today because we're already past an hour. All right, so we did the 33473. Let's get back into cities. I did not do Delray yet. That is an important city that we must know about. Delray Beach. Again, West Delray, very different than Central Delray, which is radically different than East Delray, which is near Atlantic Avenue, which is near the ocean. Very, very wide disparity of lifestyle and pricing throughout Delray Beach. But let's look at what the macro number is and then go from there. So average sold price down 2.7% September versus August, 1.158 versus 1.190. And October, 10.3% surprise to the downside, 1,031,000 versus 1.149. And a big difference between the average active price, $1 million delta between the average active price and the average sold price. Again, this is because there's such a massive disparity between the highest price points and the lowest price points. So the average is going to be skewed. This is a macro number. If you're shopping in anywhere in Delray, you need to know what's happening on a hyper local basis. But month supply of inventory tells us a story, which is no bueno if you're thinking about selling in Delray, because we had almost a 40% uptick in inventory September versus August. Then October versus September, an uptick of almost 11%. A 50% uptick in month supply of inventory is not good if you're thinking about selling or you must sell. It's very good if you're thinking about finding a deal, if you're thinking about having leverage, if you're thinking about finding a discount and negotiating the right way. You want to have lots of choices, lots of competition, and lots of inventory. And so far, on a macro level, that's what Delray is seeming to show. But again, this is going to change market to market depending on where you're shopping in Delray Beach. All right. But if we go back to average sold price within Delray Beach, I can promise you there are homes that are much less than $1 million, right? These numbers are skewed by the big numbers that exist within Delray Beach. But do not get sticker shock and do not think you're priced out of the market at $1 million. You're not. This is a macro number. All right, so that's Delray Beach, which also Delray Beach is expensive to live in. So there, if you're buying something that is lower priced in Delray Beach, your life and lifestyle will be very different depending on your price point. And if it's a lower price point property in Delray Beach, just know there's probably lots of competition from investors that are looking to scoop up that property. All right, so let's look at Lake Worth. And that's true everywhere. So it's not like the South Florida market is homogenous in some ways, in other ways it's not, but there is still tremendous demand throughout South Florida, Southeast Florida, Palm Beach, West Broward, and even East Broward and Dade. It just depends on what market you're talking about. Okay, so am I in the right place? Lake Worth, yes. Okay, let me just make sure this is correct. Average sold price uptick 4% September versus August, 611 versus 587, and October versus September uptick of almost 2.5% to be exact, 625 versus 610. There are areas within, now let's look at the delta between average active and average sold. So there are some communities in West Lake Worth that are outliers that are very pricey. There are equestrian communities that have horse farms that allow you to live an equestrian lifestyle in West Lake Worth. But there's not enough of them to skew this hard enough for the numbers to change. It's a small market, but Lake Worth, West Lake Worth is very different than Central Lake Worth, is very different than East Lake Worth. And there are some communities that I would love to live in Lake Worth. There are others where you couldn't pay me $1 million to live there. But month supply of inventory is down 2.3% September versus August. And wow, big jump in October, almost 100% gain. So 8.1 months versus 4.1 months is a huge difference. And if you're shopping in Lake Worth, chances are you're going to score a much better deal because the inventory has skyrocketed. But 4.1 months is a relatively strong seller's market. 8.1 months is a relatively strong buyer's market. So we'll have to keep an eye on Lake Worth and see what happens, but that's what it is in real time. From here, let's check out Wellington. Wellington, speaking of equestrian communities, the West Lake Worth community that I was referencing happens to be on the border of Wellington and is very similar to what living in Wellington is like. But what we see, and I'm in the wrong spot, I want to look at pricing. What you can see in Wellington is that the average sold price, holy crap, September versus August upticked 53.6%, 1.545 versus $1,000,006. And in October, downticked almost just as much, down 46%. So there must have been a large transaction that skewed the numbers, but the average sold price was 828 versus 1.536. And there's a pretty big delta between the average active price and the average sold price. 3 million is the average active price, or damn close to it, in October, versus the average sold price of 828. So there is a wide disparity in Wellington of pricing. And also know that there are homes for sale that are definitely under 828. And there are also homes on the market that are under $3 million. There's just a wide disparity of different types of lifestyle and product choices within Wellington. And Wellington is extremely affluent. It can be extremely equestrian. There are some neighborhoods that have their own private personal airport within them. So some of those homes have their own airport hangars. These are very affluent folks who fly in specifically for the equestrian winter season. So, in fact, Bill Gates is one of the folks who often is in Wellington for the equestrian season. I believe his daughter is in the equestrian community. But just goes to show Wellington is a pricey place to live. And the month supply of inventory, let's see, what do we got here? So a downtick in September versus August, down 11%, 6.3 months versus 7.1, and an uptick of 14.5%, 7.1 months versus 6.2, thus far in October versus September. 7 months is a buyer's market, but again, these numbers are going to be skewed. This is a macro number. And if you want to know more about Wellington, then it is very important to understand the hyper-local market in which you're thinking about buying or selling. Okay, I'm going to go back to, let's see, Hallandale Beach. All right, I will do Hallandale Beach. Let's see if there's any other areas that I have neglected. Nope, it looks like I've covered everything. So let's go to Hallandale Beach. Hallandale Beach is coming right up. Why am I not finding it? Is it in Broward? Ew. Hallandale Beach. No. So it doesn't allow me to drill down into Hallandale Beach. It does allow me to look at Hallandale. So that's the best I can do for now. And I will give you single family homes as well as condos. And let's see what it looks like. I will say that anything by the beach is going to be pricier than anything not by the beach. So what we're looking at is probably not all that helpful. And if you want to know what Hallandale Beach looks like, then please either opt in through my website or reach out to me on the numbers that are on my channel, and I'll be happy to get you exactly what you want to know. But the average sold price down 3.5%, massive delta between the average active price and average sold price. So as I mentioned, anything by the beach is going to be much more pricey than anything that's not. For the most part, you're going to pay a premium to live that type of lifestyle. So I suspect that's what the pricing indicates. Average sold price 836 versus 866, and then it took it right on the chin in October, 503 versus 836. Again, let's compare that to the average active price, which is 2.336. Massive delta there. But you can see 3.5% downtick in sold price versus 40% downtick in sold price. Again, probably not helpful if you're looking for a specific area, but Hallandale appears to be taking it on the chin, and the month supply of inventory indicates what I suspected, which is a massive uptick. 7.1 months versus 8.7, down 18.5% September versus August, and then a jump of 25.2%, almost 9 months of inventory versus 7.1. So went from a buyer's market to a much stronger buyer's market, which leads me to believe that if you are looking for a property in Hallandale, even in Hallandale Beach, chances are there is a tremendous amount of competition. There's tremendous leverage for you to use in order to negotiate the best deal possible. And no matter what, if you're thinking about buying or selling, we will always use leverage to negotiate whatever it is that gives you the best competitive advantage. Because ain't nobody overpaying on my watch, and ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else, irrespective of market conditions, because we will create a market within a market which will definitively find that one buyer on planet Earth willing to pay more than anybody else. In each and every listing that I've had this year, most currently, within the last 6 months, despite the market having changed, and I've told stories where I've had listings that have sat on the market much longer than I ever anticipated, we've still managed to get multiple offers which bid the price higher 100% of the time. It's just not happening as fast as it used to, which does not mean that the market is collapsing. It does mean that the market has changed, and it will continue to change. So I hope this was helpful to everybody. I hope you all had let's see here. Veronica, you're welcome. My pleasure. Holy crap, I've been on for an hour and a half. Thank you so much, everybody, for watching. Hope you have a fantastic Halloween. A very, don't eat any, oh, my kids. So I'm going to take my kids trick-or-treating tonight, but I guess the days of getting an apple with something bad in it that will hurt you are over. I don't remember the last time anybody tried to give my kids an apple. They would probably throw it at them, as they should, because it's trick-or-treating. It's not time for apples. It's time for candy. So indulge your sweet tooth. Have a very happy Halloween. If we can ever help in any way, please reach out. Stay safe. I'll see you on my next live stream, and stay tuned because I do have some more condo insurance related videos that I think you will enjoy. But that's it. Until next time, peace.